just explain the basics. As you know now, we have got close cooperation. So far, we dealt with sole trader. Remember, we dealt with the one-man business. Yes, that was our first sessions. And then we went to partnerships. And now we're going to focus on the close cooperations. So both entities, they are businesses. So that's how we need to deal with accounting records for each and every form of ownership. Just to explain a bit, as you can see, guys, I just tried to put some information about the close cooperation. You know that currently you cannot establish a new close cooperation, but you can buy an existing close cooperation. I think it will take some time for these prescribed books to phase out CC. But as I said, you can still buy an existing one, but unfortunately, you cannot start a new CC. As you know, a CC consists of one, but not more than 10, meaning it's 1 to 10 members. And to show that a business is a close cooperation, it must have CC. I think those are the things that you remember very well. And it has a legal personality. In other words, it can take you to court at the end of the day. You can sue it, and you can be sued. You can be sued by the close corporation. It's a juristic person like companies, and CCs have unlimited continuity. This means that it's not like sole trader and partnerships. So if someone decides to resign, yes, we can make sure that we pay him out, but thereafter we can continue with the same close corporation. Each member has limited liability. This means that the assets of the business are not combined with the assets of the members. So if the business owes you, it means you cannot claim that particular amount of money or that entitlement against the members. You can only claim it against the close corporation. So unless if the members made personal guarantees, is then that you can be able to claim against their assets. Obviously, guys, under the close corporation, the owners are referred to as members. Remember, under partnership, they're referred to as partners. Under sole trader, owner. So we need to know how to classify those owners of the businesses. It is taxed on the profits. Close corporation is taxed like the companies, currently at the rate of 28%. But again, it depends if that business falls under a small business corporation. Sometimes they can enjoy some relief. They can be taxed according to a lower rate, which is the specific table for small business organizations. Again, it has been formed in 1984 according to Act number 69. And then we need the founding statement and the certificate of incorporation for us to be able to establish close corporation. As I said, guys, I'm not going to dwell much on this. I just wanted to use this slide as an introduction to close corporation. Do you have any questions with regard to this slide? Okay. Thank you very much. Let's go to the next slide, guys. Obviously, I tried to explain, but I'm going to skip this for now so that I can be able to go straight to the accounts because I'm going to focus. These slides, guys, I'm going to upload them. I'm sorry I didn't upload them in advance, but for now, don't worry. I'm just going to skip these slides. I'm going to go to the accounts themselves. So don't worry, this will be answered. So I just want to focus on this because this is what we're going to focus on. And just to know the difference between the sole trader, the close corporation, together with the partnership. Let me talk about the members' contribution. As you can see here, we have what members' contribution. So we call this members' contribution under what? Close corporation. This is the other term for capital. Remember, under sole trader, any contribution by the owner was referred to as what? Capital. The same applied under the partnership. If partners contribute something to the business, again, we refer them as what? Capital. It's just that the difference between the sole trader and the partnership is that under sole trader, we only have a single owner. We only have capital, which is one capital. But under partnership, we have got 2 to 20. So depending on the number of partners, we are going to have what? Let's say, for example, if we've got 4 partners, we're going to have how many capital accounts? 4 capital accounts. So it doesn't matter. We still call it capital under partnership. And again, we call it capital under sole trader. But under close corporation, capital is called members' contribution. Hope everyone is following. Now, the next thing that I want us to talk about is the retained earnings. Sometimes retained earnings is referred to as undrawn income, yes, you can call it undrawn income if you want, and sometimes you can call it accumulated profits. Okay, so again, you can call it retained income. So in a nutshell, the retained earnings is the profit which has been retained by the close corporation, by the members from the previous year. So it means each and every year, if we still have profit left, we retain that profit. Unlike under partnership, remember under partnership, if we make profit, we share amongst partners. But under close corporation, if we make profit, we retain it. We only share what we can agree on, but it's not automatic like under partnership. I hope everyone is listening and understand at the same time. Now, the other account that I want us to talk about is the general reserves, or we can call it reserves. You know, sometimes as a business, especially under close corporation, we can put money aside maybe for 10 years, because after 10 years or in 10 years, we want to replace one of the assets. If we are putting that amount of money aside, that money will be referred to as what? As the reserves. Sometimes we call them general reserves because we just put money aside, but we don't know the reason. We don't know which asset are we going to replace. We just say after 10 years, we will decide whether to replace an asset, whether to expand the business. So reserves are also the owner's equity for the business. It's the money that is put aside by the members in a close corporation. Now, let me go to the appropriation. Appropriation, I think we're not seeing this for the first time. So appropriation, we did see the appropriation under the partnership. But what was the main aim of appropriation under partnership? The main aim was to divide the remaining profit amongst the partners. That was under partnership. But what is the main aim of appropriation under close corporation? The main aim of appropriation under close corporation is to calculate the retained earnings. Do you get the difference between the appropriation and the respective sections? Okay, no problem. I hope everyone is following. Now, let's focus on the loan from members You know, sometimes the members of a close corporation, they can give a loan to the close corporation as a business. And sometimes the close corporation as a business can give loans to members. So those will be the transactions between the members and the business as a whole. So let me focus on the uh, loan from members. So loan from members. Who can classify the loan from members for me? According to the 5 groups of accounts, how can you classify the loan from members? Are they assets? Are they incomes? Are they expenses? What can you say about the loan from members? Remember, you are representing the business, and the members gave a loan to the business. So, how are you going to classify this loan in the books of close corporation? I'm talking about the groups of accounts. Is it an asset, owner's equity? Yes, it is what? A liability. Remember that. Because this loan must be paid back to the members. So, what about the loan to members? Classify it for me. It is an asset. Yeah. So we need to understand so that by the time when we record, all these things can make sense. Okay. Now I just want to switch over to the income tax. Again, I just want to definitely, yes, yeah, same as they fall under the same category as a debtor and a creditor. Yes. Now, let me switch over to the income tax. And again, for me to clearly draw the distinction between sole trader, partnership, and close cooperation, let me explain the income tax. Remember, under sole trader, there is no income tax. The sole trader does not pay income tax. Under the partnership as a business does not pay what? Tax. But close cooperation pays tax. Currently, the standard rate is how much? 28%. So those corporations are taxed like companies. That's why you can see here we have got income tax. And how can you classify this income tax for me? How can you classify the income tax for me? Unless if I said SARS income tax will be what? A liability. But in this case, the income tax is an expense because this is the income tax for the year. But yes, if they gave you SARS in brackets income tax, this will mean that we are owing SARS that amount of money. So the income tax for the year is an expense. So the income tax for the year, if they say income tax for the year, the two accounts will always be income tax and SARS in brackets income tax. This shows that the business incurred an expense for the year, and that expense is going to be paid to SARS. So SARS income tax will be a liability. Are we together? Thank you very much. Okay, no problem. Now, there's something called distribution to members. As you can see here, distribution to members. Now, remember I said under partnership, when we have remaining profit, the partners will share that remaining profit according to the agreement. But under close cooperation, we can only share the profit to the members only if the members agree to share. It's not automatic. The minute the members agree to share the profit, it means the business in the form of a closed corporation will incur an expense in the form of what? Distribution to members. So it means part of the profit will be shared amongst the members. So it means this will be an expense to the closed corporation. Remember, if they decide to share the profit amongst themselves or to distribute profit to themselves, the profits are not paid in the form of cash. For now, they just said, we are going to pay the members. So at the moment, the two accounts will be distribution to members and distribution payable to members. So we must show that we have got an expense that we just initiated because we agreed to pay the members. But this distribution is still owed to the members. That's why the next account will be what? Distribution payable to members. Who can classify the distribution payable to members for me, according to the way I explained it? Thank you very much. It's a liability. Because again, the word payable. So these are the accounts, guys, that I want us to understand. Let me go back quickly so that I can classify. Please classify the member for me. How can you classify this? Just to check your basics. Where does it fall? Where do members' contribution fall? Under which group? I was saying, how can you classify the members' contribution? Yes, I agree. It is an equity. Let's not call it capital. It will be called capital under what? Partnerships. And again, capital falls under equity. Okay. So how can you classify the general reserve for me? Classify general reserve for me. Not an asset. It is part of equity. Yes. How can you classify the retained earnings for me? Try, please. Thank you very much. It's also equity. But these things are important, guys. So by the time when we start recording, unfortunately, I don't know what's happening here because I think maybe it's just the network on. But hopefully now you can understand me. Can you hear me now, Dave? Thank you very much. Thank you. Now, can I move or can I go to the next slide? Now the next one. Oh, I think duplication there. Now, let me explain. Maybe some of you, those who attended remember our face-to-face, I did mention something about the change in the ownership structure for close cooperation. Like under partnership, remember sometimes we can have change in members, let's say, and in change in what? In the structure of the business. That's why under partnership, we had the withdrawals. If you remember, we had admissions and then we had liquidations, which are the same as the solution. Okay. The same applies to members' contribution, and the members' contribution, the close cooperation. Under close cooperation, sometimes we can decide to admit a new member, Sometimes a member can decide to resign or withdraw, and sometimes members can decide to sell to each other their shares in the close cooperation. So we need to know how to deal with this solution, situations. So as you can see, guys, remember I said we were going to use a textbook. I just want you to go, I'm not sure I'm using an old book today, but go to question 6.1. According to my book, is on page 180. But please just go and check question 6.1 and let me know if you found that particular question, which according to me is on page 180. I'll wait for a moment so that we can find the question. And let me know the minute you find it. Okay, page 180. Go and check page 180. Thank you very much. That question, as you can see, thank you very much. That question has got three scenarios. The first scenario is about where a new member is admitted. As you can see on this question here, we have got scenario number one. They gave you three members, namely member A, member B, and member C. The existing shares in the close cooperation for each member are as follows. Members' interest for member A is 10%. Members' interest for member B is what? Is 40%. The members' interest for C is 50%. Remember, all the shares in the close cooperation, when you add them, they must always add up to 100%. As you can see here, we've got 10 for A, 40 for B, 50 for C. So if you add them together, you get 100. At the same time, they gave us existing equity or funds for these members. Member A has got members' contribution of 10,000. Member B has got members' contribution of 44,000. Member C has got members' contribution of 32,000. Again, they gave you the retained earnings for each member. So member A has got 28,700. Member B has got 140,800. And member C has got 143,500. And then they give you the total of the equity. But what is important is the statement below. I want you to highlight that, where they say transactions. They say member D joins, meaning member D is the new member. So he joined the business and we gave him condition. We said, for you to join our close cooperation, you need to bring the vehicle at the value of how much? 60,000. That is a condition that we gave member D. And then if he can manage to bring this 60,000, he's going to get 20% interest in the CC. So firstly, we need to check, because the minute we admit a new partner, it means the structure needs to change. Firstly, we need to check the change in the members' interest. So this first table here, I'm going to call this change in the members. Don't worry, in the exam, they will write for you this. So this members' interest must be in the form of what? Of a percentage. Okay. So we are going to check how will the shares in the close cooperation look after the admission of what? Of the member. Now, firstly, we need to do this. Normally, they will write these things for you in the exam, but for now, I prefer to write this as I'm going to recite existing members' interest So we can write, as long as it makes sense, anything existing, members' interest. Okay. So currently, I'm just going to copy whatever we've been given currently here. This is given. And then B is 40%. And C is 50%. Guys, these questions are always in the exam. So make sure that you understand this one. So these are given members' interest. But now we need to show that we are now going to admit what? Member D. So now you can write member D admitted. Or you can write member D joined. Remember, there was a condition here. They said for you to get 20% in the CC, you need to bring what? That value of 60,000. Remember, here we are dealing with the percentages. So under D, we're going to give D 20%. Okay? So this means that this 20% will come from the other members. So what we can do now, we must just say 20% of 10. Remember, under member A has got 10. So now, say 20% of 10, how much do you get? Remember, we're taking it over is 2%. You must put it in brackets to show that you are taking it out of what? Of member A. 20% of 40. Please calculate 20% of 40. %. 20% of 50. Obviously 10. Okay. I understand. Yes. I understand. I'm gonna put 10. If you are lost, Mitch. Yes. Thank you very much. So put them in brackets. Yes. And then now you can smile. I understand. If you smile, it will mean bracket. I understand now. So when you add those shares from A, B, C, they must give you 20 to show that you are correct. Okay. And thereafter, we are gonna find the new members' interests. I'm gonna write here. Obviously, we just have to minus here. And then 10 minus 2, 8%. 40 minus 8, 32%. Auditors, I think you are on fire there. 40%. And obviously here we have 20%. Any question about this, guys? Thank you very much. This is how to deal with when the member joins. So we need to make sure that he gets a share in the business. Any question, guys, before I go to the next one? Thanks, guys. Now, remember the fact that D joined us. Yeah, obviously D brought his own capital, meaning the capital or the members' contribution of each and each other members won't be affected because he brought his own members contribution. He brought 6, so meaning there will be no change in the members contribution, but he will have to share in the profits in the near future. So there must be a change around the retained earnings, but not a change around members contribution. So I'm going to switch over to the next slide so that I can show you how to deal with the change in members funds. So I'm going to use this table, guys. So guys, a little bit smaller, but bear with me. Okay. So firstly, we are going to put the amounts which have been given to us. For example, if you can check from the question itself, I need the existing members contribution. Remember, these have been given to us. If you can check there, we have got 10,000. Yes, I'm just going to write 10,000 like without rent sign. Really, guys, we got 10,000 and B has got 44,000. And C has got 32,000. I hope we can all see that. Those are the given figures. And I'm going to put the retained each. The retained earnings, this is 28,700. And the 114,800. 143. 500. These are the given figures. Okay. And we can add, no problem. Let's add them together. Let's just say total. I'm going to call this total existing funds so that it can make sense. They're called funds. Please use the calculator to add for us. Remember, participation is compulsory. Obviously, here is going to be 38,700. What about B? Yes, we must add. Yes, we need to add. We need total for both. About C? Thank you very much. So we added. That's why I just call it total existing funds. So these are the given figures. We added them. So we just have to make sure that we add them. Okay, let me just change the color for now. Let me just do this. Yes, we just added them. Are we together, guys? Okay, so you can use the same technique as you used from the previous yes, from the previous slide. So now we can just say now, remember we admitted what? Member D. So now you can say member D admitted. So it's up to you as long as it makes sense. So when member D was admitted, it means we're going to have some changes here. Okay. So he was admitted, let's say admitted. So we need to check any change in what we had from the pay. It's like the PPE note. Here are the given figures. Now okay, since he joined, do we have any change? Members' contribution? Disagree. And then again, we're going to check any change in pay any. Okay. So, yes, definitely you said 60,000, but where must I record this 60,000? Under which column? Who brought 60,000? Under D. So under D, I'm going to record 60,000 because he brought 60,000. But remember, under A, there's no change. Same applies under the other members. There is no change. Okay? Because he brought his own members' contribution. So there is no change when someone is admitted. Only the change will be under what? D. D from 0 to 60,000. Now, as we indicated before, we are going to have some changes around what? Retained earnings. Don't forget that now D is going to have 20% interest in the CC. So how are we going to calculate the change around retained earnings under A? We must use that 20%. So 20% of the retained earnings for A is what I need under A. I'm going to take something from A. Please help me. 20% of 28,700. Remember, we need to put brackets to show that we're taking it out. The same applies to member B. 20% of 114. Member B. 20% of 114. Thank you very much. The same applies to member C, 20% of 143,500. So when you add them together, you give them to D. So remember D, how much will be the total for those bracketed amounts? Thank you, guys. Thank you. Thank you, auditor. Any questions, guys, about that? I hope. Thank you. Now, it means these are like the movements which took place. So after that, it means we can find our new totals at the end. Now we can say, now after doing that, we can have what we call new members funds, as long as it makes sense. Normally they write for you. And then remember again, those members funds consist of, yes, ask a question. Yes. You may ask a question. Okay, firstly, retained earnings is the profit which was retained from the previous year. For example, even this year, we can have retained earnings. If we made profit of 50,000, and then we use, let's say 40,000, we are left with 10,000. So this 10,000 is retained in the business. In other words, we don't have to share it to any member. Okay. And again, they are classified as what? The owner's equity. I don't know if you got it. So it's the profit remaining from the previous year or even from for this current year. Does that make sense? Thank you very much. Yes. Okay, yes. Can I go to the new members funds? Remember, we have got changes. We need to have new members funds. So we need to check if we, let me just change the color here. So we need to check if there's any change in members contribution. And again, we need to check if there's any change in the retained earnings. Let's start with the members contribution. We know that for A, at the beginning, we had 10,000. I think we all agree. We had 10,000 for A. There was no movement. So it means the total at the end will remain 10,000. The same applies to B. There was no movement of members' contribution. We still have 44,000. The same applies to C. There was no movement. We still have what, 32,000. But for D, there was a movement of 60,000. So we end up with 60,000. Any question about that, guys? Thank you. But let's check the movement around retained earnings. Let's focus on the retained earnings for A. So at the beginning there, the retained earnings was 28,700, but there was a change of 5,740. And this has been a decrease. So how much is the new one at the end? Obviously, you need to less the one that you took out. So 28,700 less 5,740. Thank you very much. Please find the remaining one for member B. One, 3, 5, 8, 40. What about member C? Thank you very much. What about member D? Any question, guys? Now, member C, the retained earnings is only 54,700 because at the beginning there was nothing. As you can see, there was nothing at the beginning. Did you get that? Any question about that? Yes. Now, remember we need to see, for now we're separating them. So we're still going to come to the total. So I was talking about the retained earnings line. Which amounts are wrong? Or you gave me the wrong amounts there. So I thought you said, okay guys, let's go back to the retained earnings. For A, we had 28,700. 28,700 less 5,740. So meaning these figures are wrong. Guys, come on. Okay, let me just. Okay, I'm gonna erase this one. Please do it quickly for me. I can see someone is helping me. Thank you for that. It's okay. And it was raining. Hey, it was the rain was too much. So I think it's after effects. Thank you very much for erasing for me. Just erase for me. Much appreciated. Okay, it makes sense. It makes sense. Okay, thank you for that. Okay, A, you said 29. Let me come here. You said 20. Please remember, you said 22, 960. This one is set 91840. And then this one is gonna be 114. Thank you very much, guys. And I think D is correct. Okay, thank you for that. Thank you for that, guys. Yes, but now we can add them together to get the total funds here. Can you see here? I'm gonna just add 10,000 plus 22360. I think it's gonna be 3260. Okay, and what about this one? What about B? Thank you very much. Thank you very much once again. The total here is 117. Thank you very much, guys. Much appreciated. Any questions, guys? So the front will look like this. So every time when they say admit, thank you, 114. Thank you, guys. Yeah, no, it's really Monday, guys. Still recovering. Don't worry. We'll be okay. We will be okay. You know, the fact that we went to work on Monday and now we're having a lesson, still gonna eat, things like that. It's part of life, guys. Okay, any questions, guys, about this? This is the first scenario, guys. We need to understand how to do it. You need 2 minutes to drink water? Please double check. No, I'm gonna leave it like this. I trust you guys. Wait. It's okay, guys. Yes. I know. I'm gonna use my own calculator now. Any questions, guys? Okay, that was scenario number 1 on this question. So now we must go to scenario number 2. Scenario number 2. It's okay, guys. It's okay. long as we saw their own mistake. I can see it. Don't worry. Let's just push the other scenario and then we'll see how far can we go. But it's okay. One of those days, guys. Yeah, but at least we're pushing. It's better than nothing. Okay. So don't worry. We're gonna win. Can we do the scenario number 2? Thank you very much. I'm gonna switch over to scenario number 2. Okay. And scenario number 2, guys, you can even check there on page 1. Check under the table there where they say transaction, member B resigns. Okay, so again here, I'm gonna calculate, I'm gonna have change in member interest. Okay, yes. So again, I'm gonna write existing so if you can check still, I think we still have the same 10%, 50%, and 50%. Remember, it will always add up to 100. And now we need to check now what's happening here with this. Member who is resigning here. Can you hear me? Jeff? C is resigning? Yes, no problem. So we can just write here. Let me change the color. Member. So when he resigns, how are we going? We're going to take, remember, we're going to take the whole of his share. Members, no. I mean the wrong column. You said member B, so I'm going to take B's amount, which is 10%. Remember, the other members must share this according to the ratio. No, this is an independent scenario. So D was only under what? Scenario number 1. So under scenario number 2, we don't know where D does not exist. We don't even know. Does that make sense? Yes. So there are 3 independent parts. Okay. So don't worry about D. We don't even remember D. We don't know him. Okay. Now, we must, because B is resigning. So we take his share, and his share must be divided amongst the other members according to the ratio 10 is to 50. I think you know how to use the ratio. Okay. So the share for A is going to be 10 divided by 50 times. No, not 50, 60. 10 plus is 60. And then times 40. Are you all on the same page? How much you get? Okay. And the other guy, okay, this is 10. Okay, the other guy is gonna be, I'm trying to show the calculations, guys, here. 50 divided by 60 times 40. How much? I'm waiting. 33.33%. Okay. So I'm going to give 6.67%. I'm going to give C 3.33%. So the new members interest. Remember, we must add here. So please help me. The new members interest. Obviously, here is going to be 60.67. And here we're going to have, guys, you must write this 0 in the exam. It's a mark. You must write 0. Don't just leave it. And this one is going to be 83.33%. You're all following, guys. Thank you very much. Thank you guys for it. So remember, he resigned. So this is the new. So if you add them together, they must give you what? It must be, yes, 100%. Thank you very much for it. Yes, no problem. Any questions, guys? Do you feel like you're going somewhere? Ask a question, please. If you feel lost, be vocal about it so that we can find you before you disappear. Okay, before we sleep online, let's continue. Under scenario 2, as long as the member resigned, there is no change in members' funds. Why? Is because we're just gonna pay out the partner who is resigning. So don't worry about the changes in members' funds. For example, the members' contribution, the retained earnings. So under scenario number 2, we do not have change in members' funds because we just know how much we're gonna pay member C. Obviously, member B that amount of 158,800. So there's no need for us to have any changes because the members' contribution of A and B won't change. The retained earnings for A and B won't change. So we just have to pay him out. So don't worry about the members' funds. Are we together? Thank you very much, guys. So I think we can go to the next scenario, which is scenario number 3. And then if you can check scenario number 3, according to the scenario there, they say member B buys 20% of member C's interest in the CC. So we call this internal transfer. Okay. So again, I'm gonna calculate the change in the member's interest. And again, I'm gonna use the same system. Still, we have 10%. We have 40%. We have 50%. Okay, no problem. And as I said, this is an internal transfer. You can just write internal transfer, or we can write B biased from C. Doesn't matter as long as it makes sense. Okay, so if you can check here, guys, B buys 20% of C. Who can tell me how are we gonna calculate that? B bought from C. Obviously, we take something from C to B. B plus 20%. Yes, how can we calculate? And how much do we get? So let's check how much can we take from C and give it to B. So obviously you must say 20% of 50. How much is 20% of 50? And we give it to B. There is nothing under A. Okay. And now we can find our new obviously here I've got 10, I've got 50%, 40%. Any question about it, guys? Can I switch over? No problem. Now, under scenario number 3, because obviously the other member bought from the other member, meaning the other member's capital as member's contribution must also change because that share went to what? To the other member. So we need to go and change the member's contribution. We need to go and change what? The retained earnings. So the next step is to go and deal with the change in members' funds. Are we together? And I'm going to start with the existing. Understand, yes. So, but let's start from this one. I'm going to put the existing ones first. I'm going to put members' contribution. Thank you. Which 105? Which 105 are you referring to? Maybe I meant 10%. So that must be 10%. So I think I made a mistake because I think when I pressed my shift, I didn't put that. That is 10%. Yes, thank you very much for it. I'm going to copy the existing as they are. You say it is different when they say buy. Can you see in this case, they said he buys 20% of the members' interest in the CC. And then sometimes they say he buys 20%. Yes, there are two different ways. But in this case, can you see he's buying 20% of the members' interest in the CC. So we're gonna say 20% of them. Okay. If they said 20% interest of the CC, is then that we're gonna say minus 20%. I don't know whether you understand me or not. So meaning 20%, yes, 20% of the members' interest. Okay. So, but if they said 20% of the CC, if they mention CC, then that one gonna say less 20. I don't know whether you understand me. Okay. You guys hold for 1 minute, eh? Just 1 minute. I'll come back to you now. 1 minute only. I'll come back to you now. Thank you, guys. I'm back. Can we continue? Sorry for that. To drink some water a bit. Okay. I was saying, let's go back to this because it's a little bit confusing, like you said, Lendra, because here they say member B buys 20% of member C. They mentioned member C. So meaning 20% of member C doesn't mean that 20% of the CC. So 20% of member C can be equivalent to a different percentage of CC. So next time they will say 20% of CC, that can be a little bit different. So in this case, that's why we said 20% of 50. So meaning 20% of member C is equivalent to 10% of CC. I don't know whether it makes sense or not, guys. A little bit of mathematics, I don't know, but yeah. Are we together? Okay. Thank you very much for that, guys. Sorry. Yeah, let me copy this. I think the members' contribution 10,000. Correct me if I'm wrong, but I'm copying what I'm saying. We still have 44. Remember, these are the two independent parts. They are not related at all. So don't be confused. Retained earnings. Just remind me the totals. I forgot, but I think this one is 38,700, and this one, I forgot. The total is 0,800, 158, 840. Thank you. And the other one, 170. Am I correct? 175. 500. Correct me if I'm wrong, guys. 175, 500. Yes, thank you. And then I'm gonna say what happened here. This is the internal transfer. So I'm gonna write internal transfer here. Internal transfer meaning I expect some changes. Firstly, members' contribution. And I'm gonna check retained earnings. Do you expect any change in members' contribution for A? There was no transaction, nothing there, okay? Thank you very much. Do you expect any changes in the members' contribution for B and C? Yes, so we need to take 20% of C's members' contribution and take it out here. C, because B bought from C. So what is 20% of 32,000? 20% of 32,000. 6,400. And we need to give it to B. Hopefully it makes sense, guys. Okay. Let's go to the retained earnings. Any change? No, there's no change under A, but there's a change under what? C. So what is 20% of 143,500 for C? And we give it to B. I hope everyone is following. Yeah. Okay, thank you very much. Now we're going to have, just put it here, new members funds. And then I'm going to show members contribution. Okay. Members contribution for A is still how much? 10,000. Thank you. For B, any changes for B? Yes. 44,000 plus 6,400, which is 50,400. And for member C, he lost 6,400. You're going to say 32,000 minus 6,400. Okay, the retained earnings for A remained constant, but the retained earnings for B has increased by 28,700. So 114,800 plus 28,700, how much did you get? C lost 28,700, 143,500 minus 28,700. Now we can find our new total funds. We just have to add here. This remains 38,700. And please add for me the other ones. 50,400 plus 143,500. Thank you, guys. And then what about C? Thank you very much, much appreciated. So this is how the funds will look like. Okay, guys. Any questions? Okay, guys, at least we did the changes in ownership structure. Do you think that for today is enough, guys? Maybe, or what? Do you want to continue a bit? Do you have any other questions? So I think, yeah. Before we go, maybe just about. I think the next time we can do what I'm gonna do. I'm gonna show you the statement of changes in equity for this one. I'll bring an exercise for that, and I'm gonna show you the appropriation account, and then I think the close cooperation will be complete, and after we're gonna do the complete records. We say we are okay for today. Can we go and sleep? Thank you, guys. Much appreciated. Yeah, I think we pushed ourselves. We pushed ourselves. I think, yeah, no, we're all tired, guys. I'm telling you. I've been doing some marking, I know. Guys, don't forget ice. Remember, I need ice because soon they're gonna force me. They're gonna force me to submit. Please, I want ice. I did upload another one. Tomorrow I'm gonna upload the other one so that we can have 6 all in all. So far we have got 5 of them. Talking about the ice. And yeah, the other one is Thursday. Come again, Leandro. I don't understand. We say why at this time? No. Are you talking about the ice stars? Remember, no, obviously the ice stars, they must be 6 all in all, so we can still do each one for. No, remember there are other students who are still even writing tests at the moment. So I think our exam will be during the first week of November. So ice for us, obviously, it must be submitted as long as it can be submitted. For us, they're not very strict. So yes, so that's why I'm still giving an opportunity for other eyes. But some you don't even need eyes at the moment. So because you gave me enough. So others never submitted anything, but it's not like I just submitted eyes now. I didn't upload eyes now. Some eyes have been submitted long time ago. Okay. So I'm just saying for those who are still behind with the eyes, I'm still giving you an opportunity. That's why I'm loading each and every week so that we can have options at the end of the day. But those who are covered now, I think some of you, I think I have got 4 of them, so you don't have to worry about that, and they're very good. I did upload the 5th one, which is due on Thursday. And then again, I'm going to give others an opportunity for another one that I can upload, which can be due next week. Okay. So remember, I only need 4. 4 for me are enough. Okay. Any other question? Okay, you need to do the others ones. So please check, and then I'm gonna. No problem. Please just make sure that you submit them to me. So for us, as I said, they are not very strict with it, but we need to have that 5% makes a difference. Thank you very much for that, guys. Have a great evening, and then we'll meet again soon.